Hey, welcome back everyone. It is time for another red hot cover call video. Well, hey, look, today we're going to talk about the leveraged ETF. But we're not going to talk about the 3X leveraged ETFs we typically use for indexes. We're going to talk about the leveraged ETFs that companies are creating for individual stocks. I'm going to show you exactly how to use them, and I'll show you how I use them. I think if you follow me on this video, you might be able to make some money using a leveraged ETF for a single stock. So hey, look, if you like anything you hear today, I'd like you to subscribe to the channel. I come back every week, show you timely and relevant cover call trades using leveraged ETFs. And hey, look, if you like this video today, bang that like button. It lets me know you like what I'm doing. Now what I'm doing is this. I'm talking about leveraged ETF, single stock ETFs. And by the way, you can help me by clicking that like button because it tells me you like these kind of videos. It jacks me up. I come back to do it. I don't make anything on YouTube. I think this month might be around $202. Look, by you showing love to that like button tells me you like what I'm doing, and I come back with another red hot covered call video. Now, let's talk about these 2X leveraged ETFs because they are coming out. You could see there's a report that Yahoo just put out, the best performing leveraged ETFs this week. So you're going to see this more and more. And I don't think they're going to be talking about the leveraged ETFs to the indexes. They're going to talk about these leveraged ETFs to stocks because these stocks are going to run much higher than indexes. So you're going to get these kinds of gains. That's 48%, 42%, 38%. Here's the deal. These leveraged ETFs literally trade 2x a stock. So, for example, SMCI. You've heard about it. AI stock. This thing has absolutely doubled. And at one point, it literally got to $1,200 a share. It's now trading for about $450. It's really cooled down after earnings. But I'll tell you what, this thing had been rocketing. I can't even imagine if they had the 2X leveraged ETF way back when this thing was trading for $23 and it rallied to $1,200. And that could have happened. You can get involved now if you want. I'm going to show you how I use them. These things are very volatile. And typically, if you're a covered call writer, you're only going to get 1 month trades. Because what's going to happen is you're going to have expirations for 1 month. NVIDIA, which has a 2X leveraged ETF, NVDL, they have weekly covered calls. But Coinbase, which is CONL, they only have monthly. And so does AMDL, which is AMD's 2X monthly. So if these things can actually become weekly, then you could trade them for some great cash secured puts. But I'm going to show you exactly how to trade them because you will absolutely get broken off if you don't know how to trade these things. This is SMCX. And if you don't know what you're looking at, you're going to say, oh my gosh, this thing was created when it was trading literally at about $20. And it didn't take but maybe 2 days. And this thing falls from $20 to $9. And you are absolutely destroyed. This is where I'm going to help you out. This is a 2X leverage ETF to SMCI. Let's take a look at MCI during the same time. This is where MCI literally falls from 550 all the way down to 400. So that fall right there is brutal. But then you got to amplify it with the 2X leverage. And that's why when you get involved with these 2X leverage ETFs, you have to identify where the stock's trading, not where SMCIX is trading. This has nothing to do with SMCX. Has everything to do with SMCI. Any 2X leverage ETF you use, you should not be looking at the chart of the 2X leverage ETF. You should be looking at the chart of the underlying stock. And in this case, this is SMCI. So here's how I play it. First of all, we want to make sure we have a favorable entry where if we get involved in something, it's more favorable to go higher because this thing will move incredibly. And if you're not prepared for that, you are absolutely going to get ripped. So this is what I do. So say, for example, I want to use SMCX instead of SMCI. Okay, I don't have $450, but I do have enough to buy 100 shares or 1,000 shares or 5,000 shares of SMCX. Well, what I need to do is identify where I would get involved with SMCI. And that's where my 2x leverage ETF comes in. And what I love to do is plug in the numbers for the underlying, which we're going to plug in SMCI, and then we're going to plug in its 2x leveraged ETF. Now, the important thing here is we have to factor in a fall of SMCI to get involved. You really want to try to do an out-of-the-money cash secure put, give this thing a little bit of runway. If it were to fall, maybe it goes higher. Many times, if you get involved with SMCI right here, this thing could fall back to literally $349 in a heartbeat. So I would rather say, okay, I'm going to trade SMCI for about a week or 2 weeks. We're going to write a cash secure put. That's what we're going to do. The 2x leverage ETF calculator will calculate a 10% move in the stock. When you plug in the leveraged ETF, you can see where you want to get involved. See, this is where people get confused. A $1 move in SMCI does not equal a $1 move in SMCX. Okay? SMCX is a 2x move. So we'll say if this moves 1%, this is going to move 2%. And you can see in this case, we have a 3% down move, we have a 6% down move. So this is a clear visual you want to place your cash secure put. So if you think SMCI might fall 6.5%, which it easily could, that would be 420, and it could do that in one day. Well, you want to place your cash secure put with the appropriate strike with the leveraged ETF, and that would be in and around $8. Using leveraged ETFs are great because you can actually make double the premium. And the way I use this thing, if I want to double down on a stock that I'm actually down on, I use the double down calc. This is what I do. I'm doing it with AMD right now. This is how I do it. AMD's cost basis for me is $180.90. Stock's trading at $152.75. If I were to use the 2x leveraged ETF to AMD, and in this case I bought 4,000 shares, my cost basis is $15.13. As AMD moves higher, because remember it's at 152, as it moves higher, of course I'm getting closer to my cost basis, but I'm still down. But because I bought AMDL at the low, and as it goes up I'm making a profit, then what happens is with this calculator, this is what I love, this calculator will show me the break even. And you can see by buying 4,000 shares at that price, my break even is not 180.98 anymore. It's now going to be 162x. And I also have a price for AMDL, which is around 17x. So by buying AMD at 180.98, and it's now down into the 150s, I'm losing money. Well, instead of doubling down on AMD and spending all that money, it's $152 stock, I'm just going to go ahead and buy the 2x leverage ETF, which is AMDL. And when we do that, I'm able to buy more shares, which will reduce my break even. And in this case, as AMD starts to move a little bit higher, my break even is 162. I cannot write a covered call on AMD at 180.98. But I can right now at 162.75, and I can almost get $4 to $5 for that. What happens is I use these 2x leverage ETFs to help me reduce my break even quicker. If you're going to use these 2x leveraged ETFs, what I need you to do is not get seduced by the cheap share price. I want you to look at the underlying and determine where you would get involved, because that's what I need you to do. You cannot be just jumping in up here, just like we saw here, where the 2x version absolutely would have had you in around $20. You're now down 50% or more. And SMCI just acted normally. So I want you to take away from this video. We look at the underlying, figure out where we want to get involved, and then if you're going to use the 2x leverage ETF, you absolutely draw a comparison where that price is with where that is. And that's where we're going to get involved. Now look, 2x leveraged ETFs are going to make a lot of people a lot of money. They might even make them rich because they're going to come out with these for damn near every single stock. Every single stock. And what you might find is you'll feel a little more comfortable using these 2x leveraged ETFs just because of the share price. I mean, somebody getting involved in SMCI might be a little leery that you're paying $450 a share. In the case of SMCX, you're only paying $932. But you have to wrap your head around the fact that it moves 2x, so this thing will absolutely move 2x of that move. And with MicroStrategies, something that moves violently as Bitcoin moves, well, you could bet MSTX is going to move even more violent. And of course, you have Broadcom, you have SMCI, and you have all kinds of others that are coming on. I know there's 2x leveraged out there for Coinbase, NVIDIA, AMD, Microsoft, Tesla. It's happening, okay? It's happening, and we can benefit from this if you understand the movement being volatile and understand that you're trading the underlying. See, this is the key. Just because it moves violently doesn't mean it's risky. That doesn't mean it's risky. If you think SMCI is risky, then yes, the 2x leveraged ETF is risky. But if you don't think SMCI is risky, what you're getting with the 2x version is volatility. And that means big covered call premium. And that's what we're looking for when we sell premium. And if you are interested in following my trades, what I'm going to tell you is this. I use these things all the time. My members see every single trade. Look, you can watch me do the trade. You can copy me do the trade. I'm putting real skin in the game. These are the trades that I do. These are all closed trades, by the way. These are not active anymore. And you can see this big green column. Yeah, we're getting very, very good. In fact, we've been doing this 8 years, knocking it down. Right now, this is where I'm at for this year, 2024. It is only August. The covered call side of my business is doing rather well. And the dividends, for which we take a lot of this covered call profit, drop it into the dividend tree, buying all those various dividend-paying stocks, that's looking pretty healthy too. Right now, if we average $20,000 a month the rest of the way, we're going to come up with about $370, and our dividend income looks to be coming in about $160. So, hey, look, I trade, I'm active. You see all of my trades. The members get all of my trades. They see me in and out, and I even have unique trade identifiers where if you plug in a trade you've been watching, you can see where it's at and if I closed it. The phone app has it all as well. Hey, look, go to cptdashboard.com, click Upgraded Dashboard, get your 1 free month offer. Would love to welcome you aboard. Hey, look, be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.